Folks, it's Monday, it's February 24, and before we get started, I've got a big announcement today. Tom and I have decided to do something really, really special. Today's the first day of the 7 a.m. super surges, and we want to give you a trade at no cost. That's right, no cost. We want to show you how powerful all this is. So today at 1 p.m. Eastern Time, we're going live. We're going to give you premium content. It won't cost you anything. It's a one-time event. There will not be a replay. There will not be a recording. This is it. Make sure you sign in. Follow the link below. It's happening at 1 p.m. today. It's going to be amazing. And again, we're going to give away a free trade. There's not going to be a replay. We're not going to be taping it. Volatility is here, and that means opportunity for hit and run style of trades. Don't miss out. 1 p.m. Eastern Time. Let's get into it. So, global economy. Calendar for the day, sorry. We got consumer confidence tomorrow. We got new home sales on Wednesday. The big reports, GDP, right here, GDP report. That's the big report. That's the big report for the week. And again, consensus 2.1. As long as we stay above 2%, we're good. Anything above 2% is telling us that the economy is humming along. Anything below 2%, Trump is going to go to the Fed and say lower rates. I don't think it's going to happen because we're above 2%. That's the first report. The second major report is jobless claims. Jobless claims, not really worried about it. We've been really low. The average has been around 220,000, very much in line with expectations. And then the final report is going to be personal income, and I think that's going to be right in line with the jobless claims. Again, the bigger report is going to be GDP. And till we get there, we got something to talk about. Now, folks, I hate to rub it in your face. I hate to say I told you so. But you know what? If you've been watching my videos, I've been saying this for 3 weeks now. I've been saying don't go into this theory that this global economy is safe from this coronavirus, because it's not. And again, we're now finding out it's not as contained as they expected. There's more outbreaks. Now there's people all over the world who are infected. So we don't know how much this is going to impact the economy. And this is causing the stock market to slide. We are now officially below the 50-day moving average. I told you so. I told you guys we're going to break down. I told you this divergence is too much. It's just too much. It's too much. The divergence between here, I want to show you this. This is not normal. So let's move this to our 10-day, which is our period that we use. Notice upside, notice downside. The momentum levels could not generate overbought levels when we would hit new highs. Big warning sign, big warning sign. Also, put the call ratios now at 115. Its volatility is now finally above 20. We are in fear level. Now, first of all, I want to explain to you why I thought this was going to happen. We saw overbought market conditions. We saw momentum divergence. We saw, let me show you something mostly important. This is this was a big clue, because a lot of people are wondering why. How can I predict this in the future? Well, as of Friday, 58% of the stock market stocks in the overall stock market trading above $2 were trading above the 200-day moving average. In the NASDAQ 100, as of Thursday of last week, I don't remember the number Friday, there was 84. Let me show you this graph. This is important because it'll teach you stuff. So again, let me go to 5 years. Look at that, 85%. Last time we went there, this is a 5-year chart. Look at what happened. I'm not making this up. This is 5 years. And here it is happening again. And folks, I've been warning you about this for the last 3 weeks, almost daily. So please don't tell me, Roger, I didn't see it coming. I didn't see it coming. Also, remember what I showed you. The sectors in the S&P, they're fragmented. Technology and utility should not be next to each other. That means markets are fragmented. And all of that upside in technology that was due to the resolution of the trade war agreement is now slowly going to get undone because of the concerns about the virus impact. So markets need to sell off. This is very positive. If we don't have this sell-off, we're not going to go much higher. So this is really important. Now, the question is, how low will we go? Let's look at the S&P 500. Now, I think there's a good chance, let me change this to candlesticks. I think there's a good chance that we're going to hit, let me just move this on a 1-year basis. I think there's a really good chance we're already below the 50-day moving average. This is very good. I think there's a good chance we're going to hover around the twilight zone for a few days, and then we're going to gap higher, and that will resolve the overbought levels. But we don't know how bad this concern is. We don't know how it's going to go. We have no idea, and the stock market is reacting. Here's one thing I know. The put to call ratio is already at 115. It's going to go higher. For sure, it's going to close higher today, probably around 130, and that will probably be the low. So I'm looking for a low to turn. I'm looking for a day to make a low, turn around, and open and close. Excuse me, not open. Open in the lower 20% of the trading range and close in the upper 20% of the trading range. That'll more likely than not be a reversal. But I think because we got GDP this week, we don't know what's going on with China. We've got the NASDAQ market about 30 to 40% more overbought than the overall stock market, as I showed you right here. This is insane. Look at this, 85%, whereas the overall stock market peaked out right around 60%. Let me show you this so you can see for yourself. You should always compare the momentum levels on the broad market versus the S&P 500. Notice we topped out and we went lower. It didn't happen. That did not happen on the NASDAQ. On the NASDAQ, we're still hovering around there. And again, we went to the highest level and we cooled off, but not in the NASDAQ and the S&P 500. Let me show you the S&P 500 here. You've got to keep your eye on momentum levels, folks. You always got to keep your eye on momentum levels. 73% compared to 58%, and NASDAQ, remember, 85%. Notice, sold off too. The S&P 500 cooled off. But again, look at this NASDAQ. 81% now, but went all the way to 85. Look at that. Look at that. That's the highest level. Look at this. This is 5 years I'm pointing to. This is the only time we went here was in January 2018, and we crashed from that point temporarily. And folks, we need to cool off. The NASDAQ is grossly overbought. So expect more downside, very, very healthy. Nothing crazy because typically fast moving volatility resolves itself within a few days. Look for this as a purchase opportunity. Don't look for this as a sale opportunity. I think the market is going to go lower in the short term, and then it's going to hover up really, really strong because I think GDP is going to be good. I think momentum levels are going to stay up healthy, but the NASDAQ is grossly overbought, and you'll see the major downside from tech stocks because most of tech stocks are relying on China and Asia. There's a lot of cross-border activity there. So again, everything that we saw rally as a result of the confirmation that the trade war phase 1 was done should be undoing itself. Now, again, folks, if you think this is cool, notice the market doesn't open for another hour, and I'm seeing exactly what and how it's going to play out. And usually the overnight data is right on target. And today, Tom and I are going to give you an A, B, C, D, E, F, G, a full A to Z analysis. Now, folks, don't forget, we're going live 1 p.m. Tom Busby's going to be there. You'll get hundreds of dollars in value at no cost. Do not miss out. Do not miss out. There's not going to be a replay. There's not going to be a recording, but there's going to be a live trade. Don't miss out. 1 p.m. Eastern Time. Today is Monday, the 24th, 1 p.m. Eastern Time. Don't miss out. If you do, you're going to be kicking yourself, you know where. Don't miss out. This is going to be actionable, interesting, and you're going to figure out how to read the market like a roadmap. If you haven't seen Tom Busby and me in action together, you're really missing out. Follow the link below. This is the last time you're going to see it. Talk soon. Bye, guys.